You were listening to ChartingWealth.com for Tuesday, the 4th of October, 2016. Markets are down for the day. The total market down 0.40%. That's in keeping with our weekly trend. That is down. If you've not already listened to our weekly review and forecast, it's past time for you to do that so that you can make sure to keep up accurately with your daily market worksheet. You need to know what's going on with the weekly trend. I will tell you the total market weekly trend is down, and we can see on our two-day trends that we crossed over going down back on the 24th of August. And we were down through September, popped up a little toward the end of September, then rolled back over, and again had a down day on Monday. It had been an up day on Friday, but the markets blew that off. And what we've basically been doing since the 27th is sliding sideways. So we've opened the new month up, down, October down. However, we do see that the derivative oscillators continuing to lose downward energy. In other words, it's gaining some upward momentum, but we still see the signal line and the MACD heading down, and they are not crossing at this point. So we will continue to call the market down and look for opportunities to get into down moves. If we look intraday, what do we see going on? And we do see the market trying to cross over, has not yet done so, but trying to cross over going down on the 4-hour chart. Has not happened yet on IYY, the total market index fund, and the derivative oscillator is still in the positive. Now, those of you who are just using the Heiken Ashi candlesticks, of course, you did have that bleed off occur in the morning. Some of you may have jumped in then. And we do see the market moving back below the weekly trend line. It had gone above it over the course of the day on Friday the 30th and then moved below it on Monday the 3rd. Now, let's continue to see how the market shaped up. We're going back to our two-day chart, and we're moving over to SPY, which was not down as much as the total market. The S&P 500, as represented by SPY, was down 0.29%. And again, we have a green candle, but we have a large wick on top because all that energy from Friday was bled out over the course of Monday. Derivative oscillator still losing energy, and the MACD is actually running parallel with the signal line moving toward it. So it is not nearly as down as the total market is. But again, still in a confirmed down move. We do see green up candle is the way it finished off on Monday, but still the market was down 0.29%. If we look intraday, what do we see? We see again market down in the morning and the afternoon. It did not close below the two-day trend line, but did touch it both in the morning and the afternoon and then went back up. So again, hasn't crossed over yet on the 4-hour chart going down. Looks like it's getting close to doing that. Derivative oscillator continuing to lose energy from Friday throughout Monday. So we'll continue to watch. If you see that crossover occur, it'd be the time for you to jump in on a down move. May or may not happen. If it does, be ready for your virtual trade. Again, for those of you listening for the first time, we are not a stock calling service. When we talk about getting into trades, we're talking about getting into virtual trades. We want you to practice, learn how to do this stuff. Once you get good at it, you can make your own decisions with your own money. In the meantime, go to any of the online brokers and open up a virtual trading account. Now, let's look at the Qs. What is the Qs? Well, that's the NASDAQ 100. It's actually in a confirmed up move on the weekly chart. We had a crossover going down on the weekly chart. Actually, we saw the two-day trend line crossover going down around the 19th. And what have we seen happen? Well, of course, the weekly chart has continued to prevail, and the market has continued to push up since that two-day trend line was broken. Where are we going now? Well, the Qs was down on the two-day chart on Monday. It was down 0.14%. That's the smallest down of those three indexes, those three baskets of stocks. We do see that there has been pretty sustained up movement in the Qs since the 15th. when that 2-day trend line was broken. And we've not yet, though, been able to redraw a new trend line because it's not crossed over on the MACD. It's gotten close back on the 27th of September, but never happened. Derivative oscillator sure is getting small, and it does appear that the MACD is now moving toward the signal line, so there may be a cross in the future. Then we can redraw our trend line, and we'll have a confirmed up move there. But we do not at this point. Let's look at the 4-hour chart, see what we see. 4-hour chart actually crossed over, going down with that down movement. A lot of sideways sliding action if you're just looking at the 4-hour chart. Very restricted range of movements. And we'll just continue to watch and see if and when we do get a good call on the charts. Again, the thing that's been bothering us the whole time is that we have schizophrenia going on. We have a long range up movement that is on the weekly chart and a shorter range down movement on the 2-day chart. And of course, we do have the shortest range movement going down. Some of you may be playing that, which is fine. It did cross over going down, paralleling the down movement in the 2-day chart. But again, this schizophrenia is of some concern. We've been talking about that the whole time. But if you can make money, that is in your virtual account on this, go ahead and at least give it a try. I don't discourage experimentation ever in any way. That's the way you learn things. That's why we practice. All right, lastly, we will go to gold. Gold was down 0.25%. Gold's been in a confirmed down move since the 8th of August. It did pop up a couple of times over the course of time, but it has been moving down for the last 3 2-day candles. If we go and look what happened intraday on the 4-hour chart, you can see why we love our 4-hour chart. It crossed over both as a trading chart and an entry chart. It crossed over going down on the morning of the 28th of September. And if you jumped in any time during that period, you have been faring well, have you not? Actually, gold opened that day at 126.89, and it closed on Monday at a low. Well, it closed, its last was 125.17. Its low was 124.90. So again, not bad for those of you who are using gold, an inverse gold fund, to trade using that 4-hour chart. That is where we are as we closed the markets on Monday, the 3rd of October, as we go into Tuesday, the 4th of October. We appreciate you being with us. We'd love to hear from you. You want to help us out? Go to iTunes, subscribe to our channel, give us a 5-star rating, say something nice about us. You can do the same on Facebook, and go to YouTube and subscribe to our channel. What do you get if you're a subscriber? Well, you're the first to receive all of our new training, like you did about a week ago when we put up our daily market review how-to. And we gave you an example of a sheet I'd filled out, and we went and looked at the charts, and I told you what was going on in my mind and how I filled that out, and the importance of doing that on a daily basis if you really want to get good as quickly as possible in learning to read these charts. Why? Because charts are your roadmap to riches in the market. If you can read a stock chart, man, the world's your oyster. God bless you. We love to hear from you. Wish you the best in mastering these charts from chartingwealth.com.